Hello traders. The title of this video is how to day trade using Elliott wave forecast on a 15-minute chart. We are looking at the Australian dollar, New Zealand dollar currency pair on a 15-minute chart, and we're going to demonstrate how one can day trade using the Elliott wave forecast on a 15-minute chart. I'm going to go first to the Forex factory because we are expecting some major economy news tonight, and we're going to use the Elliott wave forecast to day trade at a time when the economy news is due. All right. One of the challenge traders are facing when they are using Elliott wave to forecast the market is the wave count. So in order to determine the wave pattern, one must know how to count wave. If you want to know more about how to count Elliott wave, you can go to www.24elliottwaves.com or www.youtube.com/user/24elliottwaves. All right. Going to the Forex factory now. Okay, moment please. I need to inform traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Waiting for the page to load, the Forex factory. At midnight 30 London time, we have the first major economy news and another economy news at 2:30 a.m. London time. All right, so just waiting for my page to load, and we will start the video. Coming up, it's coming up. Forex factory. Here it is. You can see here where we have the green arrow here. At 7:30 p.m. Eastern Time, that's midnight 30 London time. The economy news is concerning the Australian economy. The first economy news is the AIG construction index. If you want to know more, you click on the envelope here. All right. So we do not have the forecast here. We only have the previous figure here. At 2:30 a.m. London time, which is 9:30 p.m. Eastern time, 9:30 Eastern time, we have the unemployment change. Okay, we have the employment change and also the unemployment rate. These are high impact news that are due during the Asia session tonight. I need to show traders here. The time in London now is 33 minutes past 10 p.m. In New York, 33 minutes past 5 p.m. on the 6th of August. So by midnight will be 7th of August. So remember that, okay? So we're going to go back now so we know the economy news that are due, the AIG construction index, the employment change, and the unemployment rates, okay? Let's go back now to the chart. This is the Australian dollar, New Zealand dollar. We are comparing the Australian economy to the New Zealand economy, and we are on a 50-minute chart. I have counted my wave, and this is one of the challenges that trader will face when they want to use the Elliott wave. The first thing you want to understand is the wave principles, okay? The guidelines that you need to follow, the wave stretches, okay? And the fractal nature of the wave principle. The next thing one must not forget, okay, is, the market principle itself, the rising channel, the declining channel, the horizontal market pattern. One wants to combine the technical trading and the fundamental, okay? So here we are on a 50-minute chart. I label this session here, from here to here, that's the first Elliott wave. From here to here, that's the second Elliott wave. And from here to here is the third Elliott wave. You can see that the third Elliott wave has been very volatile. You see the torque and the here price went up and down, but close up here. It's a very strong, third Elliott wave here, talking about the strength of the bullish progression here, a lot of volatility, all right? So we will expect the fourth Elliott wave to be a kind of flat, okay, correction here. So this is the fourth Elliott wave. 1, 2, 3, 4, 5. It's a bit complex wave count here. A lot of traders will find it very difficult to count wave in this condition. But okay, so first wave, second wave, third wave, okay, a complex okay, fourth wave. 1, 2, 3, 4, 5. This is the fourth wave, the red section here. That's the fourth wave, followed by the fifth wave. Because we are in an uptrend, we must pay attention to the high, a higher high, and a higher high. Okay, all right. So now, if I move this one, you see it's 1 second, please. All right. Okay, put this one away. Bring another one. Right here. Okay. So this is the fifth wave. From here to here, that's the fifth wave, followed by the price going down. 1, 2, 3. We didn't see the internal wave here, and then the price went up all the way here. The first thing that is coming to our mind is the flat correction, the Elliott wave flat correction, the expanded flat correction. All right. The regular, there are three types of flat correction: the regular flat correction, the running flat correction, and the expanded flat correction. My favorite flat correction is the expanded flat correction. But very often traders will not recognize okay, the pattern, but with more practice, okay, trader will be able to count wave. So you may be wondering, how do I manage to count wave correctly? The only way is to keep trying, practicing, and align your wave count with the channels, rising channel, declining channel, and the horizontal channel. All right, this is and also understanding the wave principle itself. So I don't want the video to be too long. That's why I draw my wave before I start the video. So if you want to know more about wave count, okay, I'll refer traders to our YouTube channel, 24 Elliott Wave channel, and also to our website where I record a lot of video about how to count wave. Okay. All right. So after this is the fifth wave ended here, then we have 1, 2, 3, and the price went all the way up here. As always, talking about the flat correction, I will use okay, Fibonacci extension to see how far the B for Bravo, the B part of the flat correction, okay, went up. Okay, so you can see it went up all the way here, but you can see the price went quickly all the way here, only to close back down. All right, so the 138% Fibonacci retracement level is right here. The price went to target, okay, pierce through it, and quickly come back down, which means some traders place orders here to sell. All right, they sold this currency here. They placed order was placed here, limit orders were placed here to sell. If you want to know about limit orders, you may check our video on Joe Trio channel, how to day trade using limit orders by Joe Trio. That's me again. All right, so order were placed here, limit order were placed here, all right, at 138% Fibonacci retracement level to sell this currency pair. These order was filled and the price quickly went back down before closing up here. But so what we are trying to do is to forecast, okay, when we are talking about forecast, does not mean that the price will definitely do as we are expecting. We are using the Elliott wave forecast, okay, as a trading plan. Without a plan, we cannot achieve anything in the market. So the idea is the preparation and the plan. Okay, this is the preparation, and this is also our plan. So with the Elliott wave patterns, okay, we are able to forecast what is likely to take place. We are talking here about probability, not certainty, not guarantee. All right. So if the price is doing exactly what we are expecting at the time when the economy news is due, we will take advantage of it very simply. By the way, for traders that are trading forex, the Australian and New Zealand dollar currency pair will usually move in the opposite direction to the Euro USD, which means it's negatively correlated to the leading currency pair, the Euro USD. All right. So the same thing I explained to traders last time, sometime the euro-Australian dollar currency pair will also be negatively correlated to the euro-USD, but not always. Feel free to disagree with what I've just said, okay? So, this is my preparation, this is my plan, and my forecast is that this currency pair, the Australian dollar, New Zealand dollar currency pair, will go down at the time when economy news is due. We are the 15-minute chart, and we want to day trade. So exactly around 20 past midnight in London, which is 7:20 p.m. in New York, I will come back to this video. What I'm going to do now, I will pause the video and wait until 10 minutes before the news, and I will come back here and start resuming the recording to show you how I'm going to day trade, okay, at the time when the economy news is due, all right? So this is my preparation, this is my plan using the Elliott wave to forecast, okay, the next price move on the 15-minute chart for day trading purposes, all right? So now, I don't want to enter the trade now because sometimes you can see some traders sold it, okay, as I told you here, this candle is telling me that they were selling here. But does it mean that the price will definitely go down? No. One of the mistakes that traders are making is that they are assuming that the Elliott wave is a magic one. It's not a magic one. It's a guide, okay, that we follow. It's a principle that we acknowledge when we are trading, and it's helping us. It allows us to make excellent trading decisions, all right, to be on the rise of the market. The purpose of the Elliott wave theory is to stop market participants fighting the market. But sometimes traders will use the Elliott wave to fight the market. No, do not fight the market. So I will not enter the trade now, okay? If I want to, I can enter, but if I want to enter the trade now, okay, I will use a very tiny stop loss, which means if they take me out, I will not cry, all right? But you have to understand that, for instance, my forecast is bearish, okay? So, but if the economy news happens to be bullish, what will happen? This currency pair will go up instead. This is why I said to you, we are not trying to impose the wave count or the wave forecast onto the market. We will pay attention to the economy news and other market participants. But at the time when the economy news is due, I'll come back here and I will switch to the 3-minute chart, analyzing what is happening at the time when we go to the lower time frame, 1 minute, 2 minute, 2-minute time frame. We are zooming into the market, monitoring, okay, the short-term trend, what is happening now. So this is what I will do when it is, okay, midnight 20, I'll come back here and I will start watching the market, and everything aligns perfectly. If I'm happy with everything, I will place a trade and see what will happen. But right now, if I'm taking this trade, it's quite risky now because we have 3 major economy news that are due, okay, one at midnight 30 London time, another one at 2:30 a.m. Eastern time. So, ladies and gentlemen, to summarize everything here, I have counted 5 Elliott wave, 1, 2, 3, 4, and 5. The 4th wave is a complex wave that is form of 5, okay, minor wave, followed by the 5th wave. The price went on 1, 2, 3, and ran quickly up to the 138% Fibonacci extension zone. The first thing that is coming to our mind is the expanded flat correction. So my expectation is that the price will come back down in 5 more, okay, 1, 2, 3, 4, 5 down. Or because if this is a high impact news, you see that at midnight 30, I need to mention this to traders, at midnight 30, there will be the first economy news. Remember, okay? So we may not see, okay, a huge price move. Why? Because we have 2 other economy news, okay, 2 hours later. So the first economy news may not be too volatile, which means the market will be very careful and wait. All right? But my forecast is that the consensus of the 3 economy news will be bearish, according to this wave pattern, okay, that I have on the 15-minute chart. All right? So At midnight 30, we will have the first economy news, the AIG, okay, data, and then at midnight at 2:30 a.m. London time, we will have, okay, the unemployment rate, okay, and the employment change also. So I will pause the video now, okay, and we will come back to it, okay, at 20 past midnight, where I'm continuing, okay, the recording, okay, to demonstrate to traders live for day trading purposes how we can day trade using the area wave forecast on a 50-minute chart. So stay tuned, and I'll see you, okay, at 20 past midnight London time. So I will pause the video now, but before I pause the video, as always, I will put a vertical line there, okay, at the point where I pause the video, okay, right here, and I will color it in turquoise. That's what I do all the time. So color the vertical line at the point where we are pausing the video. Okay, as I explained to traders, this video is for educational purposes only. Do not use the video for as a trading signal, but use it, okay, to improve, okay, your day trading. The time now in London is 46 minutes past 10 p.m. In New York, 46 minutes past 5 p.m. I will speak to you very soon. We were recording this video for 16 minutes now. I'll pause it now, and then we will come back to it. Speak to you very soon. Okay, traders, the time in London is 30 minutes past midnight now. Okay, so the first economy news is due now. We're going to go to the Forex Factory. We're on a 50-minute chart. I want to show you here Forex Factory, and we are expecting the Australian dollar, US dollar, the Australian dollar, New Zealand dollars to go down. So we're going to click on the Forex Factory, see the green spot here, okay? And as you can see, it's loading it. You can see that the actual figure was higher than the previous figure, which looks bullish for the Australian dollar right now. But as I explained to you, we are expecting another two economy news, the employment change and the unemployment rates, okay? We do not have the forecast figures here. So we have the previous figure that was 51.8, okay? And the actual figure at 52.6, which looks bullish for the Australian dollar right now. But as I explained to you, we are still waiting for two major economy news, the high impact news, employment change and unemployment rate. Okay, we're going to go back to the Forex, to the chart and see what's happening here. We did pause the video here. So since then, the price was just going horizontal. Okay, so I've sold it now. Okay, this currency pair. Okay, so we are just now going to see what's going to happen. Okay, but as you can see, the first economy news is a little bit bullish for the Australian dollar. We will wait for the next two economy news and see the reaction, because the market is waiting for other economy news. The first economy news may be muted, okay, so that can be, okay, very quiet. So we will see what's going to happen at 2:30 a.m. London time. There is another currency pair I want to show you here. The 17 on the 50-minute chart. This is I'm going to go instead on the 30-minute chart. Here it is. This is the US dollar, Singapore dollar, and I counted the wave here. This is the first wave from here to here, and the second wave, this is a complex second wave, probably going horizontal, and followed by another complex third area wave. So the third area wave has been divided into 5 manual waves. 1, 2, 3, 4, 5. The green section is the third area wave, followed by the fourth wave and the fifth wave right here. So this is the fifth wave here. As you can see, the turquoise line, and the price went down. Okay. So to avoid that the video is too long, as you can see, it went down. Okay. I want to leave this drawing on my chart. That's why I don't want to move it to the side now. It's a bit messy here. You see that the price After the fifth wave, the price went down to this point, okay, and then just went a bit horizontal and come down here, okay, see, down here. So this was what has happened here, and then from that point, it went up again here, and then pulled back, and then went up again up to this point here. Here we can see that this move also, okay, was a bit messy, but that's what the price did. So we counted first wave, second wave, complex, third area wave, complex, third wave, the fourth wave, and the fifth wave, followed by, okay, one, okay, whatever you want to call it. In fact, if you accept that, okay, feel free to disagree, by the way. So price 1, 2, 3 up a bit here, and then come back down, okay, and then again up, okay. That's what's happened. I'm going to draw again my Fibonacci extension for the fifth wave, and I will highlight the 138% Fibonacci retracement level. Here it is. That's the 138% Fibonacci retracement level. Okay, color in green. Okay, you see how the price went up to retest the 138% Fibonacci retracement level. This is again a flat correction taking place here. As you can see, the wave count was not easy. A lot of traders will have difficulty to recognize this second Elliott wave. It's a bit messy here, followed by this complex third Elliott wave, where the third Elliott wave, in fact, is divided into 5 Manon wave. Okay, this is a complex second wave here, and then we have the fourth wave here, followed by the fifth wave. All right, they come down 1, 2, 3, 1, 2, 3, hitting the 138% Fibonacci retracement level. Okay, we will see whether the price will go down or not. Okay, doesn't mean that the price will definitely go down, but if the price is going down, it will go down in 1, 2, 3, 4, 5. All right, sometimes you may have what we call this is an expanded flat correction, the price going up to display new higher high. Okay, so here we are. So we will wait and see what's going to happen to the US dollar, Singapore dollar. Okay, I saw this one also. So going to go back again to the Australia and New Zealand to see whether we see some reaction from the price. We are still on the, now I'm going to switch my time frame again to the 50-minute chart. All right, now you can see it's the time now is midnight 37. I'm getting a bit tired now. So I'm doing this just to record a video to show traders what's happening here, talking about wave count, okay, how to day trade using the Elliott wave forecast on the 15-minute chart. All right, so as I explained to you, if you go back again to the Forex Factory, sometimes these traders get into trouble because if you have you have a lot of economy news, one following the other, some concerning the same country. Sometimes you will see that the first economy news may be muted, no reaction, okay, and then you see the second one, and then you see more reaction. Sometimes you will see the same thing. Sometimes you see the Euro USD. You will see, especially in the morning. Okay, you see some. You see here, there's one here, Euro. You see this is the Euro at 4 a.m. That's 9 a.m. London time, and again at 4:10, which is 10 past 9, another economy news related to the Euro. And sometimes you see that the market may not react straight away, and you will be wondering that why the price didn't move. All right. And then because the market is waiting for another economy news, okay? So this is what we see now happening here. So if I switch now to the 3-minute charts, I promise you, we can see that the market pattern here is horizontal on the 50-minute chart. Okay. Well, horizontal market pattern on the 15-minute chart. That's what we see now. And this is just you will see that sometimes the market will be, the price will be consolidating either to acknowledge a key level or just because the market is waiting for a very important economy news, a high impact economy news. So the market will be going slowly. People will be wondering what's going on. That's why it's so important for traders to check the economy news or the economy calendar. Okay. All right. So there's not much to say now. So what I will do again, I'll pause the video. Okay. We were expecting that it will be quiet. All right. Sometimes we will start. You may not see, okay, a volatile price move, but then a few minutes later, then it start, okay, running away. All right. But we will see what's going to happen. Okay. We'll see what's going to happen. Okay. Tomorrow also we have some high impact in here, high impact news relating to the United Kingdom, Great Britain, construction PMI. All right, so these are the things you need to pay attention to. Trade balance again tomorrow at 2:30 a.m. London time. Well, no, sorry, I'm in the wrong place. Okay, my apologies to traders. Tomorrow is Thursday. Okay, where are we? Okay, this is what I was showing before, the Australian AIG construction index, employment change, unemployment rate on Wednesday, the 6th of August 2014. So tomorrow, the high impacts news are here. The asset purchase facility, that's United Kingdom, Great Britain, official bank rate. As you can see here, okay, these news are due following each other, okay, at 7 a.m., at 7:45, okay, and for the Great Britain, you can see here at 7 a.m., okay, 3 high impact economy news, all right. And if you see that sometimes you have to wait for the next economy news, So you are watching the price, see what reaction is taking place, okay, so you can make excellent decisions. Because if you rush into it, okay, you may be taken out of the trade before, okay, the volatile section, okay? So these are the 3 economy news we are waiting for now, okay? Let's go back again to the chart and see. So on the 3-minute chart, we have a balanced market pattern, not much going on now. So that's it really, okay? So I will pause the video now and we'll wait until, okay, 2:30 a.m. London time. So for the 2 other economy news, okay? So pausing the video again and we will come back to it. Before I go, I will move my vertical line to the point where we are pausing the video. Okay, I want to check also the dollar Singapore dollar currency pair. Here it is. See what's happening here. Again on the 3-minute chart, price went down. It's going horizontal, so it looks bearish here. I will see how this economy news will affect this currency pair. Okay. All right. So now I leave this one like this. I'm looking for the Australian dollar, New Zealand dollar currency pair. Where is it? Here it is. Okay, traders, okay, let's pause the video for the second time and then we'll come back to it, okay. Then we'll see whether we see some reaction or not. Okay, so speak to you soon. Okay, traders, this is what has happened, so that's it. We'll get up to show you exactly when it was happening, okay, but this is what has happened after, because it was night time in London, so you can understand. So we paused the video here, as you can see here, this section here, and the news was released at 9:30. You can see here, if you see 9 here, this is 9. That's exactly 2 p.m. in London. and we are on the 15-minute chart. This is the 15-minute chart for the Australian dollar, New Zealand dollar. So 9:30 is right here, this candle here. You can see the price went a little bit above the consolidation session, and then pew down. All right, you see now? Down. It went quickly down very fast. Okay, so one can use the Elliott wave forecast, okay, for day trading. Okay, as you can see, what I've done to summarize this video, we have counted 5 waves. 1, 2, 3. Okay, the fourth wave is a complex wave, which is formed of 5 minor wave. 1, 2, 3, 4, 5. This is the 4th wave, followed by the 5th wave. This section here, this is the 5th wave, which are colored into pink. Here, the pink line. This is the 5th wave. I have drawn the Fibonacci extension of the 5th wave, bringing it right here to highlight the 138% Fibonacci retracement level. This is the horizontal line here. All right. So then we have 1, 2, 3. Price went down in 3 moves. Okay. This session here we couldn't highlight the internal wave or this part, but we can do it. Even if you look carefully here, you see here, look at this candle here. There was a low. That's how we can see here. There was a low here, so we can divide this one here. Like this. The high is here, yes, and then we can see went down. You agree? Went down. Okay, and but it's a bit messy one, as you can see, and it went up all the way here. So it went horizontal a little bit and then went up. Okay, so we have 1, 2, 3. If you agree, 1, 2, 3, and the price went up to the 138% Fibonacci retracement level. And then you see, I told you that people sold it here because of how the smart money trade. The smart money will place orders first, limit orders here, and they push the price into that section, and it was sold. But this candle was closed bullishly. But then we have this consolidation session here. All right, and I paused the video here, and I went to rest. But as you can see, I missed the party, so to speak. And the price started going down fast, but as the news was due exactly here, the price went up a little bit. Okay, it's not much, very much. You can see the top of the consolidation is at 11037. It went up to the zone of 11047, and boom, down. Okay, I took 38 pips just now as I get up, and this was what has happened. So we can effectively use the Elliott wave if we are day trading, okay, to make excellent decision, to forecast what is likely to take place. As you can see, we have successfully forecast the outcome, okay, of this financial instrument, okay. All right, I will wrap it now. So I hope you have learned something from this video also, okay, and we put it to use to make excellent trading decision. We are the TSTW 24 traders. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you have any comment, put it below. Any question, please get back to us, and we will also get back to you. We wish you the very best in your trading, and until the next time, okay, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.